to my YouTube channel. Now we are going to do one of the past paper question from Pearson Edexcel IGCSE. This is on depreciation. So we will just go through it. On 1st April 2018, Rafiq purchased a motor vehicle at a cost of $48,000. Dates are very important in depreciation, as I have always been saying. And on 1st December 2020, Rafiq sold the motor vehicle to Bilal for $28,000. One half of the sale proceed was received by bank transfer, and balance was to be paid on 30th June 2020. That means the moment you read it, it should strike you that half of the payment, that means $14,000, is by bank transfer. So that should reflect in cash book. And remaining 14,000, Bilal is a trade receivable. So he becomes a trade receivable. Depreciation is charged at 20% per annum using reducing balance method. A full year's depreciation is charged in the year of purchase and none in the year of disposal. So this is always there. That means in the year of purchase, even though if one day is left, we charge full year's depreciation. And any time during the year of sale, there is no depreciation to be charged. Rafiq prepares financial statement to 31st Jan. So this is very evident. This is also very important for depreciation question aspect. So year end is 31st January. That means year beginning is always 1st of February of the year to 31st of January. This is the financial year they are keeping. Calculate the carrying value of the motor vehicle on 1st December 2020. So we will start our calculation. Here we say for the financial year. So always the financial year they have taken is 1st of February to 31st Jan. Now it was bought on 1st April. So let's start writing. I'll do my working here. Okay. So working. For easy understanding, we will write the financial year. So financial year starts with 1/4/2018 to 31/1 January 2019. When was it sold? It was sold on 1st December 2020. So we should go till there. And they want us to prepare on 1st January, 31st January. So let's proceed. So 1st of February 2019 to 31/1/2020. And it is sold in the third year. So third year falls on 1st of February 2020 to 31st of January 2021. This year here in December, on 1st of December 2020, this is sold. They are asking us to calculate the carrying value. So we know what is our carrying value. Carrying value is always cost minus depreciation gives me carrying value. We know this. So we have to calculate carrying value, which I'll be calculating here. What was the cost? Cost was $48,000. And let's calculate depreciation. So depreciation at the rate of 20% comes to 48,000 into 20%, 9,600. So what is carrying value at the end of first year? 38,400. This is carrying value. And now again, we would less depreciation at the rate of 20%. That would give me 7,680. So what was the carrying value on 1st of December? Carrying value was 38,002. We'll just have to calculate the carrying value. Just a minute. And then 36703. 30,720 is the carrying value on the date of sale. So this you will write carrying value was $30,720, which you can calculate and show it to them the working. Now coming to the next part, we have to prepare a disposal account. Disposal account is always prepared on the date of sale, and also the date of sale was 1st of December 2020. This is the date of sale. And here debit, credit, date, we always take on the debit side non-current asset at the cost. So we have motor vehicle cost value. So what was the cost of the vehicle which is sold? 48,000. And on what date? On 1st of December. So 2020 December, 1st of December. And then on this side we always write as per, see, either you can, if you can understand the journal entries, you can do it according to journal entry. But if you remember the format, you can do as per format. So the first, at the time of sale, okay, what do we do? First journal entry is at the time of sale. We always pass motor vehicle non-current asset disposal account, debit to motor vehicle account. So this is 48,000. I'm showing you journal entries also so that it's easier for you to understand as well. The second is provision for depreciation we have to charge. So we say provision for depreciation only on non-current assets sold. So on motor vehicles sold. So we debit this. This will be 9,600 plus 7,800 till the date of sale. So total comes to 17,280, and credit, we are going to credit motor vehicle disposal account. 17,280. Now third is if whatever money is received. So here partly I've mentioned in the beginning only, they have received partly 14,000 cash and partly trade receivable. Bilal, he'd be paying later. So whatever comes in, so we are going to do cash book, or you can just say bank, cash book account debit, and trade receivable debit because he still has to pay. So we say Bilal account, trade receivable debit, and we will say to motor vehicle disposal account. So this comes to 14,000 each. Yeah, 14,000, 14,000, 28,000. This was sold for 20,000. Let's post this and we will see whatever is the profit or loss. So this comes on 2020, 1st of December. If you remember the format, that would be very easy also. If you want to go by journal entry, I've shown it to here. Provision for depreciation, 17,280. And on the same day, cash book, 14,000. And Bilal, 14,000 again. And then let's work out the difference, whether there's a profit or loss. So this gives me 48,000. This is 48,000. There is a difference of 20. How much is the difference? 17 to 80. We'll work out the difference. Just a second. It will be 17,280 plus 28,000. 45,280 minus 48,000. So we get 2,720. 2,720. So 2,720 is the difference. That shows our income. Credit here. It shows our loss. That is a loss for Rafiq. So we are going to credit this. So we'll say income statement. When, on which day? It will be on the last day. So 2021, 1st of January. Okay, so we'll pass this entry. Fourth one will be income statement, account debit to motor vehicle disposal account. And the amount would be 2,720, 2,720. Why is it a loss? Because income statement debit, we always debit all the expenses and losses. That is why income statement debit is a loss. So you can write here loss. This is how we solve this IGCSE depreciation, one of the questions.